9 stocks on a death watch in 2020. Sadly, these stocks on today's list are not worth the risk. When Federal Reserve Board Chair Jerome Powell warned that the U.S. faces the threat of a prolonged recession due to the novel coronavirus outbreak, no one who was reading between the lines was surprised. Eventually, we will get through this crisis. But in the meantime, we've got a long road ahead, which means keeping an eye on stocks to sell. Luckin Coffee, LK. After a horrendous incident of accounting fraud, Luckin Coffee dubiously finds itself as the worst year-to-date performer at time of writing. LK stock has dropped nearly 95% since the beginning of January, which is staggering. But if you're thinking this is an opportunity, we would think again. Seriously. Here's the deal. Luckin lied and portfolios died. Sure, proponents, if there are any left, can argue until they're blue in the face about the massive growth opportunities for coffee in China, which is traditionally a tea market stronghold. Who cares? Luckin presented itself as a growth opportunity, and growth was exactly what they lied about. If that wasn't bad enough for LK stock, look at the geopolitical context. The world is reeling from the coronavirus, which, like it or not, originated from China. And now, investors are supposed to have positive sentiment towards Luckin? We don't think so. This is a company that wholeheartedly deserves to be on your list of stocks to sell. Chesapeake Energy, CHK. If it weren't for the disaster that is Luckin Coffee, Chesapeake Energy would be the worst performer on a year-to-date basis, according to barcharts.com. But don't let that persuade you into buying Chesapeake because it's still exposed to the oil and gas industry. The harsh reality is that oil is the last thing anyone needs. In fact, the company would be doing us all a solid if they would drill the oil back into the earth. Yeah, it was a joke. But with CHK stock plummeting 91% year-to-date, you know that something is desperately wrong with this sector. Furthermore, Chesapeake hasn't done itself any favors, making poor decisions that outside fundamentals later exacerbated. On every level, CHK stock makes about as much sense as oil prices dropping below zero. Don't be a hero and just put this into your trash heap of stocks to sell. Invesco Mortgage Capital, IVR. According to their website, Invesco Mortgage Capital specializes in high risk-adjusted returns through a portfolio of residential and commercial mortgage-backed securities and mortgage loans. Right off the bat, we have a problem. Shocking exactly no one, IVR stock is one of the worst performers among stocks to sell, shedding more than 83% year-to-date. As with almost all of these names, we have nothing against Invesco as a company. But in our new normal, its core business suffers from a two-front attack. On one hand, the residential real estate market was already facing troubles because the sector was being steadily priced out from any would-be homebuyers. The threat of the coronavirus to jobs and prices is not what IVR stock needs at all. On the other side of the spectrum, with so many businesses being forced to shutter temporarily, the commercial real estate market is a landmine. Until we get better signals, it's best to leave IVR on your list of stocks to sell. Chef's Warehouse, Chef. Like so many names on this compilation of stocks to sell, we have nothing against Chef's Warehouse. In terms of growth and profitability, the company has a solid record. As well, we'd say its balance sheet is decent enough, though not great. Therefore, in a bullish environment, we can recommend Chef stock. However, with the current crisis, we can't think of a reason to speculate on Chef stock. Unfortunately, the underlying business, equipment for restaurants, is exactly what we don't need. Throughout the country, eateries have closed their doors. Over the next several weeks and months, many of them will do so permanently. Even if shares are cheap, you'll want to sit this out until you get a better read on the consumer economy. And the token rebound on Chef stock doesn't count, as meat shortages due to food processing plant closures suggest the consumer is far from a recovery. Finally, we'd like to add that although many states have reopened their economies for high-contact businesses like restaurants, Chef remains stuck in a pensive, though rising trend channel. That troubles us, which is why investors should stay on the sidelines. Ruth's Hospitality Group, or Ruth. Don't be alarmed. The hospitality in Ruth's Hospitality Group according to NASDAQ Ruth, is exactly what you think it means. Therefore, you can take the significant other, and the kids if you want, without any awkward exchanges. However, what you should worry about is the incredible decline in Ruth's stock since the start of the year. Despite the underlying company's premium restaurant brand, Ruth's Chris Steakhouse, few people are willing to go out, let alone dine in an expensive establishment. With so much going on, including the meat shortage crisis that's over the horizon, steakhouses rank well below in the priorities list. Again, if we were in any other circumstance, we wouldn't quickly dismiss Ruth's into the heap of stocks to sell. But in an economic crunch, luxury restaurants are easy to eliminate from the family budget. The inability for shares to break out of its frustrating consolidation pattern is evidence of this behavior. So, you should probably cancel your reservation for Ruth stock. Apache, APA. As an exploration company, Apache is now pointless. Don't read into this. We're not trying to be mean. Rather, we're just speaking plain truths. With crude oil prices falling down into astonishing, agonizing depths, the majors like ExxonMobil and Chevron will encounter severe problems. For a name like APA stock, if you're optimistic about it, we applaud your bravery. But bluntly, we don't understand your argument one bit. Sure, speculators received a nice chunk of change as APA stock bounced higher since the beginning of April. However, this is not a sustainable rally. Despite unprecedented price cuts among OPEC Plus nations, the issue here is the utter lack of demand. Eventually, demand will return, but to what threshold? We doubt that we'll be back 100% to pre-pandemic capacity this year. Therefore, the entire oil industry has become a game of musical chairs. We're just not sure if there's a seat waiting for vulnerable names like Apache. Groupon, GRPN. In the best of times, Groupon was a speculative bet. During the advent of the internet, GRPN stock may have appealed to investors. However, the underlying business of providing discounts to online consumers is a graying one. After all, it doesn't take much for organizations to directly market their discounts, given the mass presence of social media. But now, we think Politico.com said it best in one of their earlier articles about the coronavirus's economic impact. Millions of Americans are out of work, most others are slashing their spending, and businesses are getting crushed. In this paradigm, it doesn't matter how steep your discounts are. Nobody's buying anything except food and water. And as we mentioned, most Americans are essentially prioritizing their health over their finances. Therefore, we must relegate GRPN stock into our list of stocks to sell. Goodyear Tire, GT. With so much talk about the oil industry, it's worth noting that this one segment has significant reach to other markets. One of them is an important yet frequently overlooked one: vulcanization. Currently, GT stock is down 60%, yet it may face downside pressure in the months ahead. Why? To be blunt, who the heck is driving these days? Plus, even in the best of times, many drivers often stretch the capacity of their tires beyond their manufacturer's recommendations. With limited economic activity and the specter of a second wave of coronavirus hitting the US, buying new tires is the last item on people's priorities. Beyond that, we must consider the economic impact of millions of Americans out of work. Purchasing pricey tires is just not on the agenda, which invariably hurts GT stock. Macy's, M. Now that JCPenney has filed for bankruptcy, it's time to consider other formerly iconic retailers for your list of stocks to sell. A name that's been coming up on our radar is Macy's. For years, the narrative for big department stores has been waning due to the rise of e-commerce. However, M stock represented an investment toward an attribute that online retailers couldn't touch: the social experience. But in the new normal, that experience has become a painful liability. According to a report from kpbs.org, Macy's expects to lose up to $1.1 billion in its first quarter. It's not just about the quarantines, which didn't help. Whatever consumer discretionary demand existed went to popular online merchandise providers or to big box retailers. It's difficult to see how M stock recovers from that loss. Also, consumers may continue to buy their non-essential products online, further making Macy's irrelevant. Given such a dire outlook, M unfortunately belongs in this list of stocks to sell. Thank you for staying with us. Don't forget to leave us a like. Thank you for staying with us. Don't forget to leave us a like, share this video with your friends, and also subscribe to our channel to receive more engaging business content like today's video. Hey, if you enjoyed our video, you just have to watch this one.